Hi guys, Will here from WB Trading and welcome back. If you are new to the channel, please do hit that subscribe button and tap the bell icon so that you don't miss any of the free content that I share with the trading community here on YouTube. So let me ask a question. What would you do with $1 billion? Now, that's the amount of money that now infamous mechanical horse racing gambler Bill Benter made on one single race at the Hong Kong Derby on November 6th, 2001, using a set of rules that he built using historical horse racing statistics. And in a recent Bloomberg documentary that actually tells his story, it's noted as the biggest horse racing win of all time. And unlike others who at the time were placing bets using, let's say, best guesses, or who observed publicly available information and odds and then risked their money doing so, Bill Benter took a completely different path, a completely different approach, and it was a path that was completely unheard of at that time. Now, again, using past performance data to understand patterns that he and his business partner Alan Woods then used to put mechanical rules in place that gave them an edge. In the long term, over the races that they applied this model to, this strategy to, they very much it came out ahead. Now, in today's video, I want to break down what I actually learned from this documentary, because there are so many comparisons towards what we do as mechanical traders, as systems traders. And essentially what Bill did was he asked the question, why not remove the guessing and just use mathematics, use statistical data to make the most highly probable bets possible, proven via past performance data. Bill came to the realization that rather than guess, as everybody else attempted to do at the time within horse racing, he could actually use historical statistics from past horse races to again gain an edge by analysing this and using it to again build a strategy, a model, so to speak. So with this new idea in mind, which again it was groundbreaking at the time, Bill sent his business partner Alan Woods to Hong Kong to collect between 5 and 10 years worth of horse racing past performance data, and he would then bring this home before they then began looking at this, looking for patterns, trying to identify an edge, and eventually they used that data and that research to build a mechanical model that they would then use to actually place their bets, or in other words, their trades, so to speak. They knew that if they could find an edge, and more importantly, if they could put rules in place that would actually allow them to apply this consistently to race after race after race, continually placing the bets, then they would come out ahead in the long term. And you might now be asking that all-important question, what were their strategy rules, right? Well, together, Bill and Alan decided that they would look at overall horse race performance, again, combing back through years of past data, and they'd then wait for a high-performance horse to be cast with low public odds of winning. So in other words, really what they did here was actually identify somewhat of an arbitrage situation, so to speak. They'd then bet on these horses, knowing that, again, their research gave them an edge. And it sounds simple, doesn't it? But again, in a world where the vast majority of other horse racers relied on the news, relied on the public odds and so on, having a mechanical strategy that gave them rules to follow was in itself an edge that made them a hell of a lot of money along the way too. Now, at this stage, you might be saying to yourself, well, what does horse racing have to do with trading, right? With financial markets? Why this video? See, horse racing is similar to trading in that if you don't have an edge, as is said in the documentary itself, you will almost always lose money if you take enough trades. Sure, you may get lucky here and there, but in 99% of cases, the market actually has an edge over you, setting you up to lose from the very day that you actually open a trading account. It's pure mathematics. On the other hand, with Edge, this is completely flipped on its head, and the more trades that you take, or the more bets that you take, in other words, the more likely you are to actually make money. And Bill Benter knew this, and that was the foundation of his model. Inspired by card counting, when he heard that this was banned in casinos, he thought, well, it must work, or they wouldn't ban it, right? It must be possible to beat the casinos, to beat the odds. And he realised that, again, if he could just gain a statistical edge and prove that this worked on paper using numbers, using data, much like we do ourselves, then he could apply this in real life, risking his money in the process, with the intention of matching the outcome that their model or their strategy actually predicted. So with their strategy in hand, though, what they needed next was a location where they were able to place many bets time and again to actually allow their edge to take form, to play out. And Hong Kong was the perfect place for this, for them to deploy their strategy due to the fact that it offered 2 tracks, it offered the greatest volume of races on Earth. And again, from there, they had their strategy, they had their location, and with the Hong Kong Derby offering one of the largest pots in history, they took their trades, and in the end, they won what was just below $1 billion in the process. Again, the largest win in history at that time. And even wilder than that, they made so much money using the strategy over the preceding years. As you'll see in the documentary itself, they decided not to claim the winnings either. Now, as is actually said in the documentary, there was a real purity to what Bill had actually set out to do, really, because he wasn't attempting to make the best predictions that he could. Unlike anybody else at the time, he used mathematics rather than newspapers, rather than word of mouth, rather than publicly available betting odds. And what he did was completely new at the time. Bill took the problem of how do I know which horse will win, and he looked at this from a so far unexplored angle, asking instead, how can I understand which horse is most likely to win based on factual statistics, based on past performance data? And in the end, he cracked that code. Now, there is a lot to learn from his story and how it relates to trading, because similarly, most traders gamble, don't they? Most traders use best guesses. They might draw a trend line here or a support or resistance line there, and really they're just hoping for the best. And maybe you've been there yourself, but Bill saw past this. He knew that that wasn't enough, and by discovering patterns within historical horse racing data, much like the ones that I found and actually built the data on myself to build my own mechanical strategies, he was able to remove the need to rely on news, to rely on betting odds, and he then simply followed these rules, carried on taking those bets, those trades, time and again, as his edge played out long term, and in the end, doing so was worth $1 billion to him. Anyway, I hope that you enjoyed today's video. I hope that's added value for you. It's a really fascinating story. I'd certainly urge you to go and watch that documentary for yourself. It's only short at, I think it's about 8-9 minutes long. But that aside, I'll leave it there for today. And as always, trade with edge, with consistency. And I look forward to having you back here on the channel soon. Thanks, guys.